Hey, everybody. Today, I want to share a conversation that I had with Allison Celeste of Movement Mortgage. We talk about forbearance, deferment, and loan modification during COVID-19. Hey, Allison.
Hi.
Let's talk about forbearance going through this whole COVID-19 thing, huh?
Yes, please. Let's do that.
So I have had a couple of clients reach out and ask me about it. We all know people that have been furloughed, laid off, that kind of thing, and they're looking at this as a great way to save money during that time. But what I learned from my neighbors during Hurricane Harvey is that forbearance doesn't always mean, forgiveness, and it doesn't always mean that they're just going to take the balance that was accrued and just kind of tack it onto the end of the mortgage. It sometimes means that there's a lump sum due right at the end of the forbearance, right as that next payment is due. So how do they know the difference, and what do they do with that?
So, the biggest disclaimer that I can say about any of this is like in red letters, check with your servicer because it's going to vary per company, per servicer. If your loan is owned by Fannie Mae or Freddie Mac, then the exceptions that are being made for COVID specifically is that they're not requiring a lump sum to be paid at the end of your forbearance term, which is what other servicers that are not Fannie or Freddie are, most of them are doing. So the way that most forbearances work is that you and your servicer agree upon a set time that you believe you're going to be back on your feet and able to make payments again. And whether that's 30 days, 60 days, 90 days, some cases, 6 months, or even a year, you won't have to make payments monthly like you would normally. What most servicers are not talking about is the fact that those missed payments are due in a lump sum at the end of your forbearance term. So most Americans obviously can't afford that. I know I couldn't afford that, and I consider myself pretty fiscally sound. It's just not feasible, right? So
Right.
that is the standard in most cases, over 60% of cases. So you definitely need to have conversations with your servicer and find out if your mortgage is owned by Fannie or Freddie. And Erin will be sure to kind of pop that link down below so you guys can do some research on your own and make just educated decisions overall.
Gotcha. So what would happen, or what could people do to get out of that situation if that's what they find themselves in?
It depends on what the servicer allows. Going into it, you obviously want to ask questions about what your options are outside of forbearance if it's not a Fannie or Freddie owned mortgage. And if something like a loan modification or deferment, those are the two other routes that are more economically favorable, are available for you through your servicer, then that would definitely be the route that I would say to go, because that is when they actually take what's owed and tack it onto the end of your mortgage note, and it tends to be the one that bears the less impact on a consumer in several different areas, from financial sense, from being able to make those payments, and then also from a credit sense, not having as much of a hit on your credit like you may incur if you opt into a forbearance.
Gotcha. And they can ask for the deferment at the same time. So if they were
Yeah.
having that conversation, instead of using the word forbearance, they would just ask for a deferment and
Or loan modification,
or
either
loan
one of those.
modification.
Yeah,
Gotcha. So they need to know what they're doing before they get themselves into that.
correct. And definitely, get everything in writing before you sign anything. Understand exactly what you're getting into. I have a client right now who went into forbearance for Harvey and wasn't explained the lump sum kind of application or repercussions for that forbearance, and had 30-day lates on his credit since Harvey hit, up until
Every
he
month.
discovered, no, up until he discovered that he
Oh,
had those, which was in December of last year when he tried to purchase a home. So he had 30
ouch.
running 30-day lates on his credit report because he didn't understand the repercussions of forbearance. And it's not to say that that's every case, but it does exist. And it all begins with being really educated and informed about what your options are through your individual servicer and what that looks like for you and your particular situation.
Awesome. So moral of the story, call your lender, ask questions, ask lots of questions.
Yep.
And know what you're signing before you sign it.
Yeah.
Awesome.